Hi traders, I want to show you an example of a bearish butterfly pattern that's set up on a 5-minute chart. This is a US dollar Swiss franc daily chart that we're currently looking at. I'm just going to show you where we are in terms of the larger picture. So here again, if we just take the Fibonacci tool, we draw it from the very high to the very low, and take our horizontal tool and we just have a look at this area here. You can see very key area of resistance, support, resistance. Now if we have a look at the smaller time frame, you see obviously we've had that nice reaction there. We move over to the 4-hour chart. Nice impulsive move down. Okay, so we can see sellers are clearly in charge here. If we draw our fib tool again from the very high down to the very low, you can see we have, taking a horizontal tool here, have a look at this area right here, this 38% fib level. We've got an area of support, and we just compress this. Just look to the left hand side here. You see this area, we have support here, resistance, holds very brief as support, and then we release heavily to the downside, comes back, support again. So this area here with that 38 drop on the 4-hour looks like a key area that we want to be interested in. Let me just zoom this up here. Now if we move over to the 5-minute chart, and this is how we can use very short-term patterns to get some high probability trading opportunities. So remember, that's that area from the 4-hour right there, 92.50 level. Okay, we've had this drop off and prices then rallied and it's starting to retrace. So if we take our fib tool and we just draw it from the swing high down to the low, you see our price has rallied up and it's come very close to the 79 at 92.35. This has come to 34 and then it started to retrace. So once it does that, you want to start looking at a possible pattern. Okay, and here again we're looking for a butterfly pattern, bearish butterfly pattern, to complete around this key area. Okay, so you see the 127 extension, and if we just draw our fib tool from this swing low up to this high, see our price comes back and retraces to a minimum of 38%. Okay, so if we looked at this on the butterfly pattern, we have X, A, rally up to B, now we're tracing to C, and we're looking at the completion point for D to be up at this area here. Okay, now remember, we're not trading the pattern in isolation, we understand what the bigger picture is doing. So if we just put a line at this 127 area here, okay, 92.47, and we've identified that key level from that 4-hour chart at 92.52. You can see it's only a few pips apart. So using the butterfly patterns like this, you can actually get in pretty much at the level. Okay, but now you're using a pattern to define your risk. Okay, and just adds more probability. So instead of just trying to click in or sell at a particular level, because we don't know where price may stop, and we obviously don't know where to put our stop loss, but using the pattern we can do that. So let's just have a quick look again at the 4-hour chart. So there's the drop. Remember, that from the daily area. We're using this area in here in terms of that key area of resistance, worth the 38% from this swing high down to this low. Okay, move back to that 5-minute chart. What we want to do is put an order in. Once price breaks this high here, you want to look to place an order to sell short at 92.47. Stop loss we want just above the 1618. Okay, so it's pretty tight in terms of stop loss, and you can see the stop is above that sort of area, that 38 level with that resistance area. So here's the level we're interested in, stop loss above the 1618. So if we go to our orders and we go new pending order, sell limit, okay, with a price of 0.92, and I want to put it about a pip below, 1 or 2 pips below. Remember, it is a 5-minute pattern. The bigger patterns are more keen to give it a bit more space in terms of actual entering the order. Smaller patterns normally sort of go in at the specific number, or maybe 1 pip below, just because of the size of the pattern. So let's put it in at 92.46, and we'll put a stop loss at 92.50. Let's go down. So 10 pips, okay, above, so 56. And I want to add the spread, so I want to put it just a little bit above that area, okay. So we'll add 1, 2, 3, so 13 pips, so 10 plus a spread of about 3 pips should do the trick, okay. And in terms of targets here, again, I'm going to leave that open for now because I want to see what actually happens at that area, right. I'll just follow price along here. You can see the pending order in the platform. Okay, so we've just been spiked in. You can see the open position working, currently 6 pips under. Okay, so now we're starting to get a reaction. You remember we showed you that level around 52. It's come to 51. And here again, you can also keep an eye on those higher time frames. Here's the hourly chart. Let's just zoom this up quickly. Nice release down. Okay, you could also, you see on the hourly chart, you got this little bullish candle for a price breakdown. You could also look at sort of that area, put a stop just above that level if you wanted to. Okay, a little bit too heavy on stop for this small pattern, but that's also a possibility. But very, very nice resistance, and as I said, you got that 38 level from the 4-hour drop. You can see, obviously see it on the hourly here as well. And let's just go back to the 5-minute chart. Step it forward. So, and 3-4 pips up at the moment. Here again, you don't want to be too aggressive. The way I trade these things, I don't want to be too aggressive with reducing risk on these trades just yet. Just because we're trading very high time frame key levels with small patterns like this. I personally don't like to micromanage them too much, but if you want to, you can see here, first area of resistance finds support. Now we've broken below, now it's moving back down. You see it finding potential support here. We'll just step it forward and see. So there's a support there. So that's why I say you want to be cautious about just trying to get the risk up too fast on this, okay. Understand where you are in the higher picture, and I like to look for bigger targets. So just moving back up there, and have a look at the hourly chart. Let's just zoom this up so we can get a good view of what's going on around there. So still looking a bit bullish in terms of candles, okay, on that hourly chart. Remember, we have accepted the risk on the trade, okay, and now you want to see, the stop's only 13 pips, so it's not major. Now we're starting to break down a little bit. So you really want to see this level here give way. Still looking a bit bullish. And now we're starting to release. You see how we've come back and referenced that tiny little bullish candle there. See, it's referenced it twice there. Now it's starting to break down into this little block here now. Okay, so now we're actually closing back below this area. That's what we want to see. Only about 12 pips. So here it comes back, retests it as resistance. Now retracing, okay, just normal price movements while finding a resistance. Let's just have a look at that hourly chart now. So you can see how we've rallied. We've come up to that 38 level, into that key area of resistance, starting to break down now. What I like about this is, see, we've actually closed below this area, right? You see how we have resistance, resistance, support, comes back, resistance, resistance. See, it's closed, okay? If you can stay below that, especially on the higher time frames, that's obviously good for the trade. The other thing you can watch is, you see these micro trend lines on the hourly chart. Keep a close eye on that, just for management. So back to the 5 minute, just compress this up. And there's that trend line there from the hourly, just redrawn nicely. So I want to see price starting to break down here. Stop is still at the original spot. Okay, so you could still have price come up here. If you want to be aggressive, you could look to move to break even. I really want to start seeing some decent breakdown, some real release. You see how this is starting to release now? See how we have this area here holds. So you can micromanage these things. Here we have resistance, support, back to resistance. You can get your stop just above the high here if you really want to micromanage this, okay, for day trading purposes. What I'm going to do now, we are currently 20 pips up. We're starting to release breaking new lows. I'm going to get this stop to break even now and see if we can have a run of this trend line here. Okay, so that's obviously a key level. Alright, so there's a nice release now. Okay, we stalled and then bang, straight through. So I want to go over to the hourly chart. There's the nice breakdown. So we've got this low here, which we've currently had a go at. You see this level in here? This is quite an important area here. See this bearish candle here before price broke to the upside. Also, look at the price flip, resistance. So support, resistance, resistance. Comes back, support, support, resistance. Good area to look to take some profits. Okay, that's around 182, currently 50 pips up. So, you know, for risk reward on the trade, we're looking at pretty good trade here. You can also look at these swings up. So from this big swing, just have a look at your fibs. So there's a 50 bounce there. Got the 62 just below that level, and then if we have a look at this here, we got the 79 from this swing up. Okay, so there again, nice confidence there, and that's an area I'm definitely want to be taking some profit. So I'm going to just modify this and look to take some profits there at 0.9182 area, and I want to add the spread. We've got a spread of 3 pips, so I'm on 85. Okay, you're going to likely have some orders stacked up around this area here. Just have a look at that 5 minute chart now. Now you can always lock some profits in if you want. I like to just watch these things and see. Okay, so there's the spike down. See, it's come right down to 82. Our trade has been taken out. Made 61 pips on that trade with initial risk of 13. So we had nice risk reward on the trade. Look at the reaction. See that little bounce off that area? Okay, let's step this forward. Okay, it does move low eventually, but just have a look at that hourly chart. Okay, made a little bounce, came right back up, tested that area of resistance, and then took another leg down.